Well, thank you very much for that introduction, Judith. And I'm now delighted to be joined by David Messenger, who is the Chief Executive Officer of Global Businesses for PingPong, which is a leading global provider of embedded finance solutions for financial institutions, fintechs, corporates, and many others. David has over 2 decades of senior management experience in tech-focused companies across the world, in the Americas, in Europe, in the Middle East, and of course in Asia. And so it's great to have you today with us to talk about payments, David.
Hi, Chris. No, very happy to join you.
So maybe just to kick off, as I've said, you have extremely long experience in the payment sector and have worked for firms that have been headquartered both in the US and Europe, but also in China. And so I think you're kind of uniquely positioned to provide some sectoral insights into developments in payments in both countries across borders. What would you point as being some key unifying factors when it comes to working in payments across these kind of regions?
Thanks, Chris. So I think there are probably 2 key dimensions to look at. One is, what are the market forces driving growth and evolution in the industry? And the second are the regulatory forces, which are shaping how that evolution happens and setting the guardrails around the innovation and new solutions coming to market. I think on the market side, there are certain universal truths, whether you're operating in Asia or in Western markets, and those are primarily around, first and foremost, reliability. Secondly, speed and transparency. And I think those 2 are actually very much linked. And thirdly, it's around speed, efficiency, effectiveness of the solution. And those are true whichever market you operate in. When you're operating in cross-border rather than domestic payments, it's a much more complex situation, and the balancing between those different factors becomes much harder to get right for both the customer and for the regulatory side of things. And I think the other key dimension I mentioned is really around, what are the regulatory changes and pressures that continue to evolve? And I think when you look at regulators across the world, whether it's PBOC in China or the Fed, OCC in the US, other regulators, their goals are very much the same. Their concerns primarily around money laundering, CFT. They are around fraud and consumer protection, and sustainability and reliability of the financial system. So the fundamental drivers, I think, are the same. The way they operate is somewhat different. China, as a market in particular, operates at a different speed to other markets, certainly has done in the last 15, 20 years, and we've seen dramatic changes there. Continued evolution in the West, but not at the same speed. I think on the regulatory side, there are some key differences. The way in which regulations happen in China is quite different. The way the regulators have allowed and encouraged innovation in payments and financial services has been to create a framework which still leaves a lot of space which is less clearly defined within which innovation can happen. And then as the market develops, the regulators step in and shape it based on what they see evolving. And obviously we've seen that dramatically within the B2C payment space in China and in other industries as well. I mean, I think the key thing to remember on the regulatory side is, just as China business operates at a faster speed than Western business typically, the regulators also will act at faster speed than Western regulators.
Yeah, I think those are really good points. And it's interesting that you're bringing up towards the end there that, that focus on the kind of B2C environment in China, because I think that that's, really something that is obviously front and center in terms of when people from the outside look at payments in China, they're thinking of the developments in super app platforms like WeChat and Alipay. PingPong is obviously more active in the B2B space. So how would you maybe contrast and compare the changes that have been happening in B2B versus B2C payments?
Yeah, I don't think we've probably ever seen evolution and innovation as fast as it's happened in the B2C space in China, anywhere in the world. And one of the key factors, a couple of key factors that shaped that. One was obviously it was starting from what was a largely cash-based domestic payment situation. So it was a greenfield site. So when new technology came in, it was able to do it without a lot of legacy systems and options available. So it was a open white space. And so the innovation happened very fast. Secondly, it's a huge domestic market. So when you have a good solution, that can scale incredibly quickly. And that is what we saw with Alipay, WeChat Pay in the B2C space. B2B is different. And as you say, PingPong, we are just cross-border focused, just business focused. And the starting point for B2B was different. There were solutions in place. This was typically through traditional banking systems, SWIFT, network payments. So there were legacy systems and options available. Secondly, the pace of change has been significantly slower because cross-border payments are inherently far more complex, far more risky. I touched on before the concerns around AML, CFT. It's a much more complex situation. So innovation has been slower, but it has been accelerating. And what I've seen, obviously, one of the trends in the last 15 years has been the growth of e-commerce, cross-border e-commerce, typically Chinese sellers selling on the major Western marketplaces like Amazon, eBay, Walmart, and others. But it's, and that has grown very, very quickly. And we saw with COVID that exploded. When people were having to do everything online, e-commerce basically grew 4 years in less than 1 year in terms of the volumes. But what is less noticed, I think, is the impact COVID had on B2B payments, because that is anything much more structurally significant in many ways. E-commerce was on a long-term growth trajectory already, and that has continued since COVID. With B2B payments, it really jump-started efforts to digitize cross-border B2B trade. When foreign buyers could no longer come to the Canton Fair, do the tour of the factory, develop the business relationships and solutions in person, it has generated a real push and innovation around B2B marketplaces, digital platforms that facilitate cross-border B2B trade. And that's something we've been very active in the last 3 to 4 years.
Absolutely. Big growth in kind of wholesale e-commerce as well, definitely. Maybe just first, before turning directly to that kind of e-commerce dilemma and the kind of impact that it has on payments, maybe also I want to pick your brains on the rails point, because obviously you're quite right to say that lots of the transfers here are still happening through very traditional rails like SWIFT. How do you see maybe new technology affecting that kind of transfer? Obviously we're living in a kind of DLT world now, potentially with stable coins kind of emerging. Do you think that has an impact on the kind of speed and efficiency of those cross-border transactions?
Yes, I think I would highlight a couple of things. First is, actually within the SWIFT network, there has been very, very significant innovation. I mean, when you look at SWIFT GPI and the speed at which payments are credited to the beneficiary, it's a dramatic improvement on where SWIFT was 5 to 10 years ago. I think the challenge here with GPI is that there's a link between speed and transparency, because GPI may complete its portion of the transfer very, very quickly, but it's also dependent on the receiving bank in terms of how fast their processes make those funds available to the beneficiary. And so this is where I think, SWIFT maybe doesn't get as much credit as it should for the innovations it's made, because it's not necessarily transparent to the beneficiary where that final delay is happening. So SWIFT is evolving fast, which is great to see. I think what we're also seeing is the rise of domestic real-time payment solutions. And that's whether that's SEPA Inst, TIPS in Europe, whether that's FedNow in the US. And I think there are now up to almost 70 real-time payments, domestic systems in place around the world. And so where you're doing cross-border payments, you have the opportunity to leverage local payments on both ends. And if you have a global network like ours, you can, we've been doing real-time payments actually for quite a few years, or close to real-time payments for quite a few years, just using the domestic innovations that have happened. Yeah. So I think that's the second area where there's been significant change and a lot more opportunity to take advantage of. And then I think on the DLT side, I think there are two ways to look at this. One is stable coins, as you say. I mean, I think I'll put crypto on one side as not really it's more of a speculative asset arena rather than a payments tool. But it's, if you stick within the fiat world, stable coins are a very interesting technology. Penetration is still relatively low. I think just under 5% right now are leveraging stable coins. But I think there is definitely a role for stable coins as we go towards the future, where we will see central bank digital currencies evolving. but that will take time. And I think stablecoins have a role to play during this transition period. But what I am seeing that's really starting to have an impact around DLT is not so much stablecoins themselves. It is around leveraging DLT technology internally within global banks and payments institutions. And so talking with some of our major banking partners, we work with Citi, JP Morgan, most of the tier one banks around the world. And it's very interesting to see how they have invested significantly in purely internal DLT technology. And very innovative, great efficiencies in terms of treasury and real-time liquidity management on a global basis. But that's not being exposed to the customers as a DLT or stablecoin solution. It's just providing those benefits of the banks and payment companies like us putting those capabilities in place internally. And I think that's where we will see visible improvements in speed and efficiency of cross-border payments and treasury management in the short term. Stablecoins gradually evolving and taking a larger role. And ultimately, I think, yes, we'll look to central bank digital coins playing a more significant role.
So primarily an operational efficiency in the first instance, with maybe some longer term developments to come later. Coming back to that e-commerce point, I thought you were making a very interesting point also around the fact that both in the wholesale and the retail markets, essentially transactions are being carried out more and more online, and obviously that leads to greater possibilities for cybercrime, for phishing, for online fraud, and so on. So how do you see dynamics potentially evolving in that kind of space?
Yeah, there is a tension here. As as the payment networks evolve, the technology evolves. You do get this incredible improvement in speed of payments. Along with that, instant payments equals instant fraud, and so it is a major risk. I think in the US last year, about 50% of all fraud was authorized push payment fraud. And it's a double-edged sword. Real-time payments are a great solution, but they require greater investment in tools to verify that you're managing the fraud risk. And there's a trade-off there between the customer experience and actually managing the fraud risk, and also the AML risk, which is front and center for any cross-border payments or financial institution. I think 99% of regulatory fines in the last year were for AML issues. So what we have to do is find ways to leverage new technologies faster than the fraudsters leverage the power of the new technologies for real-time payments. And I think we're seeing some interesting things with verification of payee, or confirmation of payee, as it's called in different regions. The UK has gone live with that now as a requirement as of October this year. Europe is moving in that direction as well. Australia, the Fed now, the US is moving, I think will move in that direction, but without the same regulatory force behind it, it appears, in the short to medium term. And I think some of these tools are very useful to use. And certainly what we're looking to as we operate around the world is say, even though these new safeguards are developed for a domestic market and primarily developed for a consumer protection rather than a B2B scenario, is how we can actually tap into those in all the countries where we operate locally and connect the dots between them. So that if we've got operating on both sides and we've got those tools available, we can provide better solutions to our customers. And I think the key here is digitization creates greater risk. These provide opportunities for fraud, but also as you digitize, you get access to more data. And managing risk is all about data. The more data you have, the better you're able to manage the risk. And so that's a big push, I think, for us and for everyone operating in this space, is how can we not just execute payments, but integrate broader data sets to help us manage the risk around those payments. And that's, we look for a range of data sources, continually looking to invest in connecting new data sources to help us with that. And recognize that, real-time payments from a consumer point of view and consumer expectation really does mean real time. People want that ping, yes, money received instantly. When it comes to business, I think there is more leeway. And I think businesses recognize cross-border payments have these risks. The amounts involved are far higher than the smaller consumer transactions. And they're willing to accept, even if payments are not exactly real time, they are fast. And particularly, as I mentioned before, where there is a link with transparency. I think the frustration and the challenges around traditional cross-border payments was not just the amount of time, but the lack of real transparency as to where the payment was in the process. And I think if we can focus on transparency as a key objective related to speed and managing expectations, providing that sense of where the payment is in the process, that allows some leeway in really being real time, which our business customers will accept, and they value the reliability and the protections that come from putting those extra safeguards in place. And it's going to be a question of keeping that balance right, taking advantage of new technologies as we go forward. And I think the other thing that I obviously can't avoid mentioning is AI and machine learning. And this is something that, again, it's a double-edged sword, because it can be used to generate deep fakes. It can be a very powerful tool for fraud, but also obviously it's a hugely powerful tool for us and other payments financial institutions in how do we identify risks, both real-time transaction monitoring, post-transaction monitoring, pattern recognition, to actually target our efforts where there is risk. And allow, based on having enough data, allow the clean, low-risk transactions to go through very fast, very seamlessly, but put very good controls in place where there really is the need to focus.
Well, David, we're almost out of time, so maybe just one last question, which is, I think, reflective of all of what you've been saying today, which is, throughout your dialogue, you've been talking about the need for ever-increasing speed to the point of real-time settlement, essentially, the need for greater sort of security, transparency on where it is in the transaction, and then also the need for greater interconnectedness across borders and increasing numbers of markets. And all of these sort of seem to intersect, but have certain amounts of tension between how do you get all of these to progress at exactly the same kind of rate? Do you think there's kind of like a way out of this conundrum, or a way of kind of squaring the circle of fast, safe, and global payments? Is there something the community of people in your industry can kind of do together, perhaps?
Yeah, I think there is. I think, first of all, within those conundrum, as you say, how do you balance these factors? I think the first thing is to not overemphasize truly real-time payments. It is about very, very fast payments. And safety first, and the fastest possible within what are safe margins is probably the starting point that we all need to recognize. It is not a consumer payment with that absolutely real-time completion. I think the key is, I mentioned in terms of the verification of payee type examples, the key is things are being developed in a patchwork. Every country, every regulator, central bank is developing their regulations, their way of doing things. And the key is, how do we move towards more shared data standards, more shared frameworks, or ways to connect these capabilities, which are rightly being developed on a domestic basis first. And I think this is where it is the private sector, global payments companies and banks who can come together and start developing solutions that connect the dots between data sets, data tools that are available to manage risk, and create more of a common framework, which is in all of our interests in terms of serving our customers better.
So I think that's a great sort of note to leave it on then, in that case, a strong business-led move towards international harmonization of standards around payments. David, thank you so much for joining us today. And back to you, Judith.